Palantir's stock's been on an absolute tear since the earnings dropped a few days ago, and we're now sitting at $187. I'm staring at these numbers trying to figure out if this is justified or if we've completely lost our minds. And when you realize the 52-week low was $29.27, we're talking about a 540% gain in less than a year. The market cap has exploded to $441 billion. $441 billion. That makes Palantir more valuable than almost every company in the S&P 500. We're in completely uncharted territory here. Spoiler alert, I'm still bullish, but man, at these valuations, we're not just pricing in perfection, we're pricing in miracles. Before we dive in, though, obviously not financial advice. So Palantir just reported Q2 2025 earnings, and the numbers explain at least some of this insanity. Revenue hit $1.004 billion. Over $1 billion. That's 48% year-over-year growth. For a company that's been around since 2003, pulling nearly 50% growth at this scale is absolutely insane. But here's what really melted my brain. U.S. commercial revenue grew 93% year-over-year to $306 million. 93%. That's not a typo. And quarter-over-quarter, still up 20%. The acceleration is accelerating. I had to read that number 3 times because I thought maybe they meant 9.3% or something. Nope, 93. The commercial business that everyone said would never work, that Palantir could never crack, yeah, that business just about doubled in a year. U.S. commercial customer count is up 64% year over year to 485 customers. They added 53 new commercial customers just this quarter. That's almost one new customer every business day. And these aren't small deals. They closed 157 deals over $1 million, including 66 over $5 million and 42 over $10 million. The average deal size is going up while customer count is also going up. That's the holy grail of SaaS growth. But let's address the elephant in the room, the valuation. At $186.96 with a $441 billion market cap, we're trading at a price-to-earnings ratio of 621. That's not a valuation. That's a fever dream. We're at roughly 106 times trailing revenue. Even for a company growing at 48%, that's absolutely bonkers. The market is basically saying Palantir will become one of the 5 most important technology companies on Earth. Not just an enterprise software company. We're talking Microsoft, Apple, Google levels of importance. And you know what? Looking at these numbers, maybe the market's onto something. Their rule of 40 score is 94%. 94. That's 48% revenue growth plus 46% adjusted operating margin. They're literally off the charts compared to other enterprise software companies. The only company even close is NVIDIA at 122%, and NVIDIA is basically the entire AI infrastructure right now. Adjusted operating income was $464 million with a 46% margin. Free cash flow was $569 million with a 57% margin. They're printing cash at margins that make other software companies look like grocery stores. What's driving this insanity? It's AIP, their artificial intelligence platform, and unlike every other company claiming to do AI, Palantir's actually shipping real products with real results. Lando Frost cut their production planning time from 40 hours to 30 minutes. The State Department reduced foreign service clearance time from 60 days to 12 days. Fannie Mae is detecting mortgage fraud in seconds instead of months. Nebraska Medicine has something they call a Palantir unit of time, when they can drive value in less than an hour. This isn't vaporware. This is deployed, working, creating billions in value right now. They had over 1,000 implementations across different use cases. The network effects are insane. Each new customer makes the platform better for everyone. And they just announced a partnership with TWG Global to push into financial services. If they crack banking the way they've cracked commercial, we're talking about another massive growth vector. Government revenue, which everyone seems to forget about, was $553 million, up 49% year over year. U.S. government specifically was $426 million, up 53%. So while everyone's focused on commercial, the government business is still growing at 50%. Total remaining deal value hit $2.42 billion, up from $1.37 billion a year ago. They raised full year 2025 guidance to $4.142 to $4.150 billion in revenue. U.S. commercial revenue alone is guided to exceed $1.3 billion, at least 85% growth for the full year, the highest ever quarter of total contract value at $2.3 billion, up 140% year over year. They're not just growing current revenue, they're growing future revenue even faster. Now let's be real about what needs to happen to justify a $441 billion valuation. At $4.15 billion in revenue this year, we're at over 100 times revenue. Even if they maintain 50% growth for the next 3 years, which would be unprecedented, that's $6.2 billion, then $9.3 billion, then $14 billion in revenue by 2028. At that point, to trade at a reasonable 20 times revenue multiple, they'd need a market cap of $280 billion. So the stock would actually need to go down, even with perfect execution, for 3 years, unless the market is betting on something bigger. Maybe they're betting Palantir becomes the enterprise AI platform, not one of many, but the standard, like Microsoft Office for AI or Windows for AI operations. If that happens, if every Fortune 500 company needs Palantir like they need Microsoft, then maybe $441 billion is actually cheap. But that's a massive, massive bet. The quality of the business model is undeniable, though. These are enterprise contracts with insane switching costs. Once you've built your operations around Palantir's ontology, you're locked in. The U.S. commercial remaining deal value growing 145% year over year shows existing customers are buying more. Net dollar retention is 128%. They have $6 billion in cash and no debt. The business fundamentals are perfect, but at a 621 PE ratio at 106x revenue, even I'm struggling to justify this, and I've been bullish since the 20s. The bear case writes itself at these levels. Any disappointment, any deceleration, any hint that the AI revolution isn't happening as fast as expected, and this stock gets obliterated. We could easily see a 50% correction and still be expensive by traditional metrics. The beta is 2.07, which means when the market corrects, Palantir will correct twice as hard. At these levels, you're not investing, you're speculating on Palantir becoming one of the most important companies in human history. And maybe they will. The technology is incredible. The execution is flawless. The market opportunity is massive. But at $187, that's not investing based on fundamentals. That's betting on a paradigm shift in how every company on earth operates. And so where does this leave us? Honestly, I have no idea. The stock is so far beyond any reasonable valuation metric that traditional analysis breaks down. We're in price discovery mode for what the market thinks the winning AI platform is worth. If Palantir executes and becomes the enterprise AI standard, maybe $441 billion is the deal of the century. If anything goes wrong, if growth slows to only 30%, if competition emerges, if AI adoption is slower than expected, this stock could lose 70% and still be expensive. The risk reward at $187 is absolutely terrifying. Early investors who bought at the 52-week low of $29.27 are up 540%. That's life-changing money. But buying here, you're basically betting that Palantir becomes bigger than Oracle, SAP, and Salesforce combined. Maybe they will. The numbers suggest it's possible. But man, at these levels, even this bull is getting vertigo. Wild times in the market, folks. Absolutely wild. We're either witnessing the birth of the next tech titan or the peak of the AI bubble. Time will tell which one it is.